All right, boys and girls, welcome back. Welcome back, welcome back. No April Fools here this evening, guys. It's about that time of day again here, folks. Time to get that nightly newsletter started. It is April 1st, 2014. Welcome to a brand new month. Finally got out of the end of that first quarter. Like I've been telling you guys for a few weeks now, don't let the last few weeks of March get you down. It's a very difficult time of the year. I've explained that many, many times. This is notorious for being the time when we finally pull around that corner here. So we got through the end of March. Whew, we made it. I got all 12 fingers and toes last time I counted. And let's use those here to get our nightly newsletter underway. Tonight, we're going to talk about what happened today. We'll take a look at some of the trades that we called last night on the newsletter. We'll go over the markets that we saw today. We'll also talk about the news that we have that came out this afternoon and this morning. We'll take a look at where did April Fools come from. We'll look at this day in history. We'll take a look at the news for tomorrow. We get another busy day tomorrow, including some important news for crude. And then we're going to jump right into charts here. We'll jump right into crude charts. We'll go to gold. And, of course, we'll finish up here tonight with our mini Russell. Got a lot of stuff here to talk about, guys. Before we get down to business, though, I do want to remind you, if you're watching this on anything else besides our blog right now, head on over to sidewaysmarkets.com. And don't forget to join the newsletter mailing list. That way, you are guaranteed to always get, every time we send out this newsletter, you're going to get all this stuff included with you as well. At the same time, we open up our live trade room every afternoon for trial members. If you're not a full member of SchoolOfTrade.com, I have a special invitation. I want to send you a free pass to attend our live trade room as a guest this afternoon. We'll take some trades together. You'll learn more about how we actually use this material to make profit every day in our live trade room. Don't forget that blog address is at sidewaysmarkets.com. And if you go over to SchoolOfTrade.com, you can join our free trial. It's right on our website. Join the free trial. Tough to miss it there. And, of course, you can learn more about our beginner, intermediate, and advanced memberships. We have been around for over 10 years here at School of Trade. Our community grows by leaps and bounds every day, and I'm excited to welcome you into our community of professional traders. Let's get started. Successful and unsuccessful people, they do not vary greatly in their abilities. They vary in their desires to reach their potential. Now, I know a lot of you right now are dreaming about being a trader. But here's the deal, guys. A dream without a plan of action is a fantasy. Are we dreaming about being a trader, or are we fantasizing about being a trader? If you want to be a professional trader, but you're not taking the steps to get educated on the risk, on entries and exits and everything that goes with it, if you're not taking that first step, you've got to put together an action plan. And that's the difference between somebody who's dreaming about trading and someone who's fantasizing about trading. Let's get started. Now, last night, we talked about gold, crude, and the Russell. And we gave you guys some very specific trading recommendations. Now, on crude this morning, crude actually fell all the way down to 100. If you remember, we were waiting for a chance to buy, and now we're finally in that position where we should be getting some buying opportunities here on crude. So no trades triggered. We're waiting right now for the entry pattern to get long. On gold. Now, gold, we were looking for selling opportunities, so the exact opposite to crude. Last night, on the newsletter last night, we gave you guys a specific entry at 1289.2. It went to 1288.4, so we just barely missed it. I mean, literally 8 ticks away from getting that entry. So very, very close, but close doesn't count in trading. It only counts in horseshoes and hand grenades. On the Russell, same thing, except opposite direction the Russell. Looking for buying opportunities in the Russell. Gave you guys the exact entry at 1161.1. We didn't even get close. It never pulled back, and it just whoop all the way up. So Russell, we we really didn't just miss the Russell. The Russell, if you recall, we were looking to buy the pullback, and it never pulled back. So that was the deal with the Russell. But gold was too bad. Gold, we just missed it by a couple ticks. So far, so good here. We haven't been able to get into anything yet this week, at least what we called on the newsletter. Now, of course, in our live trade room, we take anywhere from 8 to 15 trades a day. These are just simply trades that we called last night on our newsletter. So make sure you're aware of what happened last night. And we'll keep talking about opportunities here today on crude, gold, and Russell. So stick around. Markets today. Crude oil. Look out below. We've been waiting for that big move on crude. We weren't quite sure what direction crude was going to go. You got this issue in Russia and Crimea pushing prices higher. You've got concerns over manufacturing in Asia and, of course, now in the U.S., dragging prices lower. We've had that big round number of $100 a barrel that's been lingering below us. And today, in a very wide, dramatic fashion, price tumbles all the way from 101.50, 229 ticks of range today, finishing down almost 2 full percentage points and closing below the $100 a barrel. Very, very important. Make sure all those boat owners out there gas up that boat, because you never know where it's going next. Next up here, on gold. Now, gold had a very sloppy session. Gold might be like this the rest of the week. We got non-farm payrolls on Friday. I'm not going to make any predictions right now, but today was a very sloppy session. A range-bound session today on gold with a slightly bearish tone to it. We did a lot of this today. We went down a few ticks, came back up. Went down a few ticks, came back up. Went down a few ticks. And if you look at a time-based chart from today, the time-based chart today showed us a lot of dojis. Right? A lot of really tiny bodies and a lot of big wicks. And that basically tells us that, they try to go up and they come back down. They try to go down, they come back up. So it was a very balanced tone, slightly bearish today on gold, very narrow range, only 106 ticks of range. And we had a closing print here today just below 1,300. And again, another really small move in the day. So 31 basis points, 0.31 percentage points lower on gold. Very mild session today on gold. On the Russell, to the moon, Russell, to the moon. And of course, Russell just had a big day yesterday, pulled back early in the session, and then whoop, had a couple small pullbacks, and it was off. Very, very bullish. It finally, later in the session today, I shouldn't say that, later in the session today, it did finally pull back. It was the early session, it just jumped and just went. And then it finally pulled back late in the session, about 2:30, and gave you another opportunity to get in on it. What we're doing is, when you see the trend is up like this, you gotta buy those dips, guys. We talked about that last week, where we saw a record number of institutional buyers buying these dips. So we know there's gonna be more of that, where that came from. That should be 200. Sorry about that. There should be 220 ticks of range, not 22 ticks. And the closing print, we're getting up there again, up 1.67% today on the Russell. We're looking at that 1,200, big round number. We're going to see that come up in today's charts. So very exciting stuff if you're buying the E-minis right now. News today. Now, just like we talked about last night. Last night's newsletter, we talked about European news. Remember how we said European news would likely make the U.S. opening bell a little bit sluggish? That's exactly what happened today, isn't it? Right? So call me crazy, but we might just know what we're talking about here. So the European news overnight, basically we saw some very bullish manufacturing numbers out of Europe overnight. Talked about that in last night's newsletter. That pushed equities higher. The E-mini S&P today did make fresh all-time highs during the day, but came off those highs and did not close. The big news here in the U.S. today was 10 a.m. manufacturing. We had a very bullish manufacturing number that came out today at 10 o'clock. This was what we consider to be Red Star news. Red Star news, as you guys have heard me say before, Red Star news is that very important news we expect the big moves to happen from. So we got that today. So Red Star news today. Now here was something very interesting. We saw very big jumps in new orders. We saw an even bigger jump in the backlog of orders. Okay, so what they do is they break down these manufacturing reports for us. This was ISM Manufacturing today at 10 a.m. What they do is when you read the report, they break down all the bits and pieces that make up the report. The only sector that didn't grow, and this is big, the only sector that didn't grow was employment. So we know that manufacturing is pumping out more products, but there's no more employees? Now, why could that be? Why would a small business not hire more employees? Well, I can think of a couple reasons why. I know here in Los Angeles, I don't hire anybody because it costs me an arm and a leg. I'll tell you right now, if they want to help out the jobs market, they should probably stop taxing all these small business owners because I'll tell you right now, I'm a small business owner. I know many of you are. And I know that the majority of us small business owners, no matter what state in the union we are in, we're not hiring right now because of all the red tape and all the taxation and all the junk that now is being dumped onto us. Why? Well, because we're making too much money. Us hardworking entrepreneurs out there, we make way too much money. I mean, it's not like we take all the risk and put our own lives. Oh yeah, no, wait a second. Yeah, you're right. We should be getting I'm kidding with you. But guys, that's clear as a bell, right? That is clear as a bell. So make sure you write your congressman right now and tell them, you want to fix this jobs problem? Stop taxing me so much as a small business owner. It really boils my blood, I'll tell you that much, especially being here in California. Oh my goodness, don't even get me started on trying to do business in California. The best business in California is laying in a lounge chair. All right, so 10 a.m. manufacturing, the only sector that didn't grow was employment. Funny how that happens. Very big clue ahead of Friday's non-farm payroll numbers, right? Non-farm payroll numbers, keep that in mind. 4:30 p.m. Now, this is something that you may not have had on your radar today. Only a few people will get this. This is the stuff you got to pay for. Every Wednesday, we have inventories at 10:30. We'll talk about that in a moment. So tomorrow, we have the Department of Energy's, right, their inventories come out tomorrow morning. Well, this evening, 4:30 p.m., we have the API crude oil inventories, which came in with the first draw in 6 weeks. This is the largest draw since 2014 January. Now, this sounds really important, but I don't think so. What's happened is the last 6 weeks, because keep in mind, guys, the production of crude oil is a gas break, right? It's a balancing act. They don't want to pump as much out of the ground than we need. So what's happened the past 6 weeks? We've been in a build. That means that the inventory stockpiles have been piling up. Well, now what happens? Now they blow the whistle. They say, stop drilling, right? So they stop pumping it out of the ground. We continue to consume it. The weather's getting better. People are getting back to driving their cars again, right? Leaving their houses. It's not snowing like the Dickens anymore. And so now that inventory gets used up. So this doesn't really surprise us very much. Tomorrow morning, though, at 10:30 a.m., that's going to be the important number. All right? I think we can probably write this report off because you know what's happened. They've lowered the production of crude, and that's, of course, what's done this. Now, late today, we were hearing back and forth in the news wires this afternoon about House Republicans rolling out a new budget proposal, which will balance the budget by 2024. 2024, huh? Don't work too hard over there, boys and girls. I would hate to think we could get anything done within a few years. Really? 2024? Last time I checked, that's 10 years from now. Are you kidding me? What am I missing? Am I missing something here? Is this a joke? It is a joke. It is a joke. I know the answer to that question. All right. Anyways, I promise that it's not an April Fool's. I don't think it is. Maybe it was an April Fool's joke. I mean, it's that ridiculous to think. Are they serious? Really? 10 years? Really? Okay, sure. 10 years, ready, set, go. We'll see you there in 2024. Incredible. You know, I've always loved the relationship we have with our politicians. They think we're stupid, and we don't trust the word that comes out of their mouth. Seems like a working relationship. Let's keep moving. This day in history, April 11th, April 11th, April 1st, 1700. You know, I was wondering where this whole April foolery got started. Now, there are many, many different theories of how this all began. But it seems the most consistent theory is it dates all the way back to the 1700s, where there was a group of pranksters, right? The old school, what was that old television show, Jackass or whatever it was, they played pranks to each other. Well, you know, every few decades there's a new prankster team that kind of hits the airwaves. Well, something tells me they didn't have the internet back then, but this is a group of English pranksters that created a tradition of pulling pranks on each other on April 1st. Now, there are also other theories in that the beginning of the year, right? The new year used to be April 1st, but then they changed this to January 1st. And every year there were people who were celebrating New Year's on April 1st, and they were thought of as fools, right? Because they didn't know that the new year had been moved to January 1. So there are a lot of different theories behind it. So I like this one. I think that's probably how it began, right? Whether or not it was because the New Year date had changed or whatever it was, but that's probably what happened. April 1st, 1960. This is pretty cool stuff, guys. The first U.S. weather satellite, the Tyros 1, launched from Cape Canaveral. Pretty cool stuff. Take a look at that hyperlink right there. You can see that first satellite imagery. Pretty cool. April 1st, 1970, right? A definite upstanding citizen, President Richard Nixon, signs a bill which bans cigarette ads. Kind of interesting. Now, I was born in the 80s, so by the time that I was around, they didn't have those. But I do remember seeing cigarette ads on billboards, and that, of course, was banned in the, I believe it was the early 90s. So it took them a while to pick up on the fact that cigarettes kill you. So that would probably be a good reason to keep us off the radio and television sets. And then here's some great news here. April 1st, 1976, Jobs and Wozniak, they founded a tiny company out of their garage in Northern California. They called it Apple. And that little tiny company changed everything about the way that we think of personal computers. Today, as of the first quarter of 2014, the company of Apple, of course, which is a publicly owned company, is worth $450 billion and is the largest company on the planet. Very, very cool story about Steve Jobs and Steve Wozniak. Just recently, of course, when Mr. Jobs unfortunately passed away, his autobiography, was it an autobiography? I can't recall if it was an autobiography or not. I don't think it was. But the book on Steve Jobs, a fantastic book. I would highly, highly recommend it. I'll tell you right now, we're talking about small businesses, and this is a guy who knew how to get a business to run. My favorite part about Steve Jobs was the reality distortion field. I love that about him. They called it the reality distortion field. Distortion field. And basically what this meant was that when Steve Jobs told you, "Hi, boys and girls, we're going to go to the moon this afternoon." And of course, they're sitting in Palo Alto, California at a conference table. They go, "Steve, we're not going to the moon this afternoon. We have a meeting to go to." And I'll be darned, by the end of that meeting, Steve Jobs, he believed it. He believed whatever he wanted out of his people, out of the people around him. He believed it so passionately that the people around him started to believe it too. And the same people who said, "No, you cannot put a monitor with a keyboard and a desktop. You cannot put that into one thing and call it an iPad. You can't make a laptop. It can't be done." Well, guess what? After working with him for a few weeks, they started to believe. Steve Jobs was a great example of the power of focused energy and just believing yourself. Who cares about everyone else? If you're passionate about it, you will find a way to get the job done. And he is just a great example of that. And of course, moving on here, We got some news tomorrow. We get a lot of news tomorrow, and we're getting ready for Friday's non-farm payroll. Now, we had a ton of news yesterday, and you saw what happened. It moved everything around. Well, of course, tomorrow morning, we got more news out of Europe. Only a little bit of news tomorrow morning out of Europe, but it is Red Star news. So be aware tomorrow morning, if you're trading the London session, 4:30 a.m. Then we got 8:15. We got the ADP employment report. This report is usually a sleeper. The 8:15 employment report, usually everybody misses it. It's not a very important report at all, but it definitely gives us a sign of things to come with Friday's non-farm payroll report. All right, so the ADP employment report, ADP is a large payroll processing company here in the U.S., so they turn over their records to the government. Oh, I wonder if, no, they couldn't be the only ones turning over their records to the government, could it? Google, and I get my eyes on you. So ADP employment, 8:15 a.m. We then go over to factory orders. That's the big number for tomorrow. That's the Red Star news tomorrow. Okay, factory orders is Red Star news. And then we've got 10:30 crude oil inventories. Remember, we talked about this earlier. We saw that API number come out. What was it, 5.3 million, something like that? So a draw in inventories. So tomorrow at 10:30, we're going to take a look at that tomorrow. Now, it's very important that we remember when you're trading crude oil on Wednesdays, do not be surprised if it's sloppy before that 10:30 news report. I personally, and if we go down here a little bit further, I talk about this. So there's your news worksheet here, right? Use that for tomorrow. And I talk about the fact that when you're trading crude oil futures, it will be a little sloppy before inventories tomorrow at 10:30. The way that I always do it is I always sit on hands 15 minutes before the inventory report, and then I try to wait 10 to 15 minutes after the report comes out to find that new trend. Now, sometimes there's no trend at all, so I'm not going to say there's always a trend, but I try to figure out, okay, what's the reaction to this, and how can I capitalize on it? I'll give you one very important kind of hint, is that usually the initial reaction to that news at 10:30 is usually the opposite of where it ends up going. All right? Don't say I didn't warn you. Be careful tomorrow before 10:30. I will be sitting on hands in my trade room between 10:15 and 10:40, 15 minutes before, 10 minutes after, and I'll wait patiently to see if we can find that new trend. All right, before I go jumping into that first trade after inventories. So, speaking of crude inventories, let's jump right into our crude charts here this evening. Here's my VIP chart, and finally, this is a sight for sore eyes. Finally got some big movement here on crude. Just sold off here this afternoon. Plenty of wave patterns on the way down this afternoon. Hope you guys will grab a piece of that. So today we had an opening print here today at the lows. We didn't spend much time inside that range. We quickly fell out of bed there. Dropped, so we had open at the lows. The closing print today at the lows. The volume down near the lows. Two-day relationship is bearish, and of course, a very wide range. Now, what does a wide range tell me to expect for tomorrow? It tells me to expect a range-bound market. It will probably be a lot narrower than it was today. So expect to see a little bit narrower range tomorrow. And I'll tell you right now, if we open up inside the range that we got today, if we open up above 99.55, open up below 101.42, if we open up inside that range, we are most likely going to be inside of a range-bound market tomorrow. So when I say range-bound market, what I mean is to buy the lows, sell the highs of the range, and avoid the middles. All right, so we know tomorrow, a bearish print below 99.55, an opening bell tomorrow below the lows. I'm bearish. An opening bell tomorrow above the highs, although I don't think it's going to happen. 101.42. So those are my levels for tomorrow on crude. Again, watch that opening bell closely tomorrow morning. If it's inside today's range, you know it's probably going to be a little bit sloppy. And then remember, we got 10:30 news. So just wait for 10:30. And that's when you should see the breakout of that range tomorrow if we're inside that range. Moving forward, very, very surprised that we didn't test this 103 area. We got all the way up there to 102.50, but couldn't quite get the job done. to go up and test the high. I would have been looking for a sell up there, right, at the high of that range there. So that would have been a great spot to be a seller, but we never got the test. We come tumbling right back down here now, and yeah, there's that big round number again. Now, this is always a little bit of a disappointing spot because we know how challenging it's going to be around this $100 a barrel level. So what we're hoping that tomorrow is another day of selling just to get us away from this area. I don't care where we go. Take me up to 103, take me down to 95. I don't care where we go, but get me the heck out of this area of 100. So remember, 100, big round number. Big range today. Tomorrow is crude inventories. Guys, it's smoking in my office right now. And when there's smoke, there's fire. Can you smell it? Think about it. $1, right? $100 per barrel. Big round number. A sticky psychological level. Big, wide range today. What does a big, wide range usually tell us? Tomorrow's likely to be a range-bound day. And what is tomorrow? Tomorrow's a Wednesday. We've got 10:30 a.m. news. Are you with me? Are you with me on this? All right, so tomorrow probably not going to be the day to test out a new strategy, okay? Tomorrow probably not the day to try out the new, fancy mouse that you've been working on with. Tomorrow's not the day, right? Tomorrow's the day to protect your capital. Tomorrow's the day to take the easy patterns, your continuation patterns if we leave the range, your reversal patterns if we're inside the range. And of course, every time I see this big round number of 100 within striking distance, I always remind myself, sell it and bring it back down. Buy it and bring it back up, right? Use that $100 a barrel. Use that as a price magnet. Do not enter trades around 100 unless you want nothing of profit. Enter your trades short above 100 and long below 100. Now, on to our 16 anchor. Big bullish channel. If you remember last night, I wanted to get a chance to buy these lows this morning. I could barely even get some contracts to sell. This thing just torched right through that low. I mean, there was no opportunity at all to be a buyer. It just wham right through the floor. So with that, we tumble all the way down to 99.50, the low of it here at 99.30. So we got all the way down in this buy zone. Now, I am bearish, that's for sure. But I'm certainly not bearish into this support. So what I'm looking for is I'd like to get short, but I'd like to do it in the way that we just talked about. Remember, there's that 100 level. Now, follow the bouncing ball. I would love to sell this 176 because now think about it. If I can get in short above 100, let that 100 level just drag it right down. So we have these things which we call price magnets, right? Opens, closes, prior week highs and lows, big round numbers. So use those. Use those price magnets for your profit targets. You're crazy to be trading short around 100, but you're brilliant to be trading short above 100, right? That way you can use the 100 level as the price magnet for your target. Now, the ideal scenario is I want to get short here at 176. All right, 176 all the way up to 101.11. So about a 30-tick range there. So that's my plan here right now on crude. Bottom line is I cannot sell where we are right now. I'm right at that support level right there, and I'm at a discounted price. Moving forward here now. Okay, so took care of crude there. Moving forward. Now, gold pushed lower today, but boy, I'll tell you, gold felt like it was asleep at the wheel all session this morning. You can see we did go lower here on gold. Remember, I've been bearish on gold for over a week now. We made a killing last week selling short on gold. I hope you guys were able to make some money with me as well last week. Here now on gold, though, we continue to go lower. So very easy trading opportunity selling short right now. All you need is the entry pattern. Now, I talked about this earlier. Look at the price action here. Let me zoom in on this real quickly here. Look at the price action on this. All the volume now towards the low. Little bit of volume up top here, but you can see, though, more volume towards the lows. Look at that wick, right? Unbelievable price action today. So very balanced, very sideways and range bound with this just little slight tone of a bearishness to it today as we continue to go lower. I'm very curious how this gold's going to play out ahead of non-farm payrolls. Remember, non-farm payrolls, just like FOMC, is very, very important for gold, right? Because, of course, what happens in non-farm payrolls, just like what happens on FOMC day, will directly be applied to the monetary policy by the Federal Reserve banks. So the monetary policy changes, gold will react, and that's why gold is always watching these big news events. So we're moving lower. We close at the lows, volumes in the middle, so a little bit balanced today. Again, bearish across the board. Bears, 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 bears. We did get a very narrow range today, though. This very narrow range makes me excited for tomorrow because we've got some important news tomorrow morning, factory orders at 10 o'clock. I could easily see this narrow range, and in anticipation of Friday's non-farm payrolls, perhaps we make a big run up, profit taking, or perhaps we continue, right, to see gold sell off. We'll see what happens. We get a big opportunity tomorrow because today was a narrow range. Narrow range today usually results in a much wider range tomorrow. Opening bell tomorrow morning. I'm looking for an opening print tomorrow below 79.1 to get short, above 87 even to get long. Looking to go short below 79.1, looking to go long above 87 even. If we stay inside of that range tomorrow morning, I'm buying lows, I'm selling highs, right? I'll treat that as a range-bound market. And that is not just for gold, that is for any market that opens up inside the range the following day. Here's your gold VIP. You can see here on gold, I told you guys to watch out for the shorts as soon as we broke through this key support. And you can see here, it's just been easy money on the way down here on gold. We broke through the 87.7. The next level is at 62.8. So don't say I didn't warn you. You know where we're going next. 62.8 is the next level on my radar. And then from there, we get a nice little hop, skip, and a jump down to 1227.3. Dare I say 1200 is in the mix? Now, this low right here, that low right there was on December 31st, 2013. So that was the last. It's amazing. It really is amazing how the last day of last year was the lowest price in this chart. Pretty incredible stuff. You know, some people try to tell me that price action is random. Really? I disagree. When I see the low on a chart, December 31st, I don't know. Tough to call price action random when you see things like that. So, moving forward here, now to our faster anchor. So you're bearish on gold, huh? Boy, I'll tell you, we just barely missed that entry short on gold here this afternoon, or I'm sorry, last night's newsletter. Now I've got two more options for us here. I've got selling opportunities, 88.5 to 91.1, 94.8 to 97 even. And then you know where I'm going for. Targets here at 66.3 and 60.1. So my job here now is to get the price up into these sell zones and then sell it short using our profit targets that are posted below us. If I am bearish, if I want to sell short, I will not sell short at a discounted price. And that's exactly where we are right now. If I'm going to sell short, I'm going to sell at a premium price. If I sell my car, if I sell my house, if I sell a pocket full of gold coins, it doesn't matter where I'm selling. I'm a fool for selling it at a discount. A wise trader, right, no matter what you're trading, sells at a premium. And that's something that takes a lot of new traders way too long to learn that lesson. You got to remember, even though, yeah, once in a while you'll get lucky selling at a discount, you make some money on that. But over the long period of time, if you keep selling at discounted prices, you're going to catch it on the chin eventually. And when it catches up to you, you're most likely going to lose a handsome sum. So sell at a premium, buy at a discount. I gave you two areas here to get short, and of course, two targets to use for that short. Let's keep going. Now, We go from the gold to the golden boy here today, the mighty mini Russell. I call it the golden boy because, boy, this Russell has been a big moneymaker for us over the past 18 months. It's been fun. It's been very fun trading equities. So we have a very narrow range right now in the Russell, and I pointed this out yesterday. Prior week low, prior week high. So you can imagine this 93.8, that's definitely going to be hit if we go higher here overnight into tomorrow. And then look closely, there's that 1200. Drum roll, please. I don't know if you heard that drum roll or not. My band is out of town right now on tour, so I did it myself. Anyways, let's keep going. That was a horrible, horrible rendition of the drum roll. So we have opening print here, opened here at the highs, right? That was the first clue we got today. Opening print at the highs. Very bullish clue. But I'll tell you, the big clue, though, was what happened after the opening print. Look closely here. Look closely here. What is that first candle? We never looked back. We opened up at the highs and wham, never looked back. So we jumped at the open. And that's why I said earlier on in this newsletter, I said it wasn't until late in the session that it actually pulled back to give us a chance to get into it. All right, so if you missed that initial blowout here at the opening bell, well, then you were able to get in a pullback later on in the session. Remember, don't buy those highs. Buy the lows. Buy at support. But Joe, sometimes it doesn't pull back. Well, you've got to be patient. All right, I promise. You be patient to wait for that pullback and you will be rewarded. So bullish opening print at the highs. The closing print at the highs. All right, now this is a little bit difficult because this one here now, we've got volume at the highs, but the majority of that volume is down near the lows. So this tells us that we're probably going to pull back before we go higher. Does that make sense, guys? Look at the volume. Think of the volume as breadcrumbs, right, that those traders left. And we can use those breadcrumbs to figure out where they were and what they were doing there. Okay, so think about the volume as being breadcrumbs left to mark the trail. This tells me here that I know the majority of that volume was down around the lows of this range. And that was just because it spent the most amount of time down around 1175. So don't be surprised if 1175 comes back up overnight. But again, I'm bullish here. We are buying at a discount. I'm looking for an opening print tomorrow. I've got 87.5. Look for an opening print above 87.5 tomorrow morning. Look for an opening print below 70.3 tomorrow morning. All right, remember, opening print above, bullish, opening print below, bearish. And again, like I said before, you got that prior week high. That's definitely going to be on our radar tomorrow. And you got that big round number just staring at you, just begging you to be testing it. So let's find some patterns. Let's find some opportunities here. Now we move from our VIP chart, which is a 30-minute chart. We now move over to our JJ bars, which are range-based, right? These are not time-based, they're range-based. I personally like to use range-based charts because they allow me to see the patterns much easier. You can see the patterns forming much easier on a range-based chart. It's just easier to see them than it is on the time-based charts. So that's why I use them. As you can see, we drew a trend line here. We drew a trend line here. And that creates this very wide price wedge. Now, this price wedge is very important because clearly resistance at the highs, support at the lows. Now, you probably remember me talking about this area right here yesterday. Remember how I said yesterday, let's get ready to buy? Well, that's exactly what happened. So we had everything we needed today on the Russell to get long. We even had a nice bullish opening bell. Now we have to worry about the fact that we're trading at the high. Never a spot where I want to be what? Buying. I don't want to be buying at the highs. I can also see that I have 94, right? 1194, 1200.7. So we have some significant resistance waiting for us overhead. This is likely to push that price back down towards the other end of that wedge. So we know right now that trying to be a buyer on the Russell, unless we get some tremendous strength, it's going to be a little bit of a challenge. Let's see if we can find some levels here to get long. Now, this is exactly what I was looking for, because now you can see I don't need to worry about buying at the highs now. I'm going to buy on a pullback. This is the easiest way to do it. Don't try to guess. Don't try to get lucky. Don't try to predict. Wait for price to pull back. That way, when I do get long, I'm getting long here instead of here. Does that make sense? Right? I don't want to buy at the high. I don't want to buy into resistance. I want to buy now as the price pulls back. So it's pretty simple. I don't want to buy right here. I want to buy it off that resistance. I've got buy zones here at 1180, 1164, and 1170. Now, tomorrow morning, I'm going to provide you with, I think I got it right here somewhere. Nope, I don't have it here available. But I will update this chart on the blog here, though, because I have some targets for you guys overhead. 1200, definitely going to be the target to use overhead. And again, we talked about, what was it here? Sorry about that. 1194, right? So 1194. Don't say I didn't warn you. 1194. Looking for a buy here with 1194 as our target. Alrighty? So as the Russell keeps going higher, I'm looking to buy some pullbacks using wave patterns, and I've given you guys 3 different locations to be looking for those buying opportunities this evening and going into tomorrow's session. All right, guys, that wraps up tonight's newsletter. I want to thank you so much for being a part of the trade room today as a student of mine. If you're not a member of our trade room yet, what are you waiting for? I have a special invitation for you guys and gals to come out and join me as a guest this afternoon in our live trade room. And don't forget, register for our nightly newsletter on our blog over here at Sideways Markets. Successful and unsuccessful people do not vary greatly in their abilities. They vary in their desire to reach their potential. I hope you guys found value today. Keep working hard. Remember to remember to learn it so you can earn it. It is April Fool's Day after all. And I'll see you guys in tomorrow night's newsletter. Don't be bashful. Don't be shy. Send me comments. Give me feedback. I want to know what you guys like and what you guys don't like. All right. And I'm going to go try to work on my sideburns because Waz has some serious sideburns in that picture. What a cool photo. What a cool photo. Guys, I'm out of here. Adios, amigos. Bye-bye for now.